So there's all kinds of things going on in real estate today, but it'll eventually crash simply because the government is making it so expensive to build a house.
It says real estate crisis, 6 million homeowners in forbearance. Very sad. Before they can receive stimulus money, forbearance means they need to re-qualify for the loan.
And so what I'm going to do here is I'm going to tell you which real estate markets I believe are going to crash at the end of this year and certainly into next year.
So there's all kinds of things going on in real estate today, but it'll eventually crash simply because the government is making it so expensive to build a house. So, you know, I'm going, this is so screwed up. But that's what happens when the government steps in and they kick capitalists out and then the socialists. But anyway, that's why savers are losers today. So we have the Fed just announced they're going to keep interest rates low for about 5 more years. Well, that means my generation, we're screwed because Wells Fargo's not going to pay dividends anymore. For pensions to operate, they need about a 7% return. And because they suppressed the interest rates, just like they suppressed COVID, what a fake that was. But they suppress interest rates and they suppress COVID, it kills everybody. It's killing everybody. So for the young at heart and all this, the way out of this is to be an entrepreneur. You see, I don't need the stock market to make money. And I really don't need the real estate market to make money because I already bought my property long ago. So I just cash coming in. But the real advantageous thing here is this little cell phone. But, you know, we can take ideas like books and games and things like this and create our own, and this ships it out to the world. So all I'm saying here is what your mommy and daddy told you is go to school, get a job, work hard, save money, get out of debt, and buy a house, invest in the stock market for the future. It's going to wipe them out. It's old ideas. You need new ideas.
Once the forbearance period ends, a tidal wave of property is going to hit the market. It's going to go to the banks, it's going to get listed, and the supply and the inventory is going to jump way up. And what's going to happen is that supply is going to drive prices down because it's going to be high supply, low demand. Now, there's low supply, high demand. The correction is coming, and what you do to prepare for it is your decision to make. Mark my words, this will be the biggest real estate opportunity in your life, but only if you're prepared. Also, as a side note, I'm not going to go into politics. I don't really care who wins. Yes, there will be policy changes. Yes, there will be tax changes. Yes, there'll be social reform, etc., etc. But the bottom line is this. We're still going to have a lot of people lose their homes. We're still going to have lots of renters that can't afford to pay their rent. We're still going to have lots and lots of businesses that do not make it, as you can already see, many of which have filed for bankruptcy already. That is, of course, if the government doesn't start throwing money at this problem, kicking the forbearance and the payments down the road, kicking the evictions down the road, and all of the things that they're doing right now to artificially inflate the economy with the government money. So as it sits right now, this is where I believe the real estate markets that will crash right now based on the data that I'm seeing, that I did research over the last 2 weeks. So we had 2.1 people that were 90 days plus due on their mortgages, and there were 8.8 million late on their rent facing some kind of eviction. Now, this is information that we've talked about. This is obviously a little bit different from some of the other information, but what's really important, I believe, is this 90-day issue. So last video, I said that I felt like there was going to be about 1.5 million to 1.7 million listings hit the market I still think that's probably a pretty good number. From what this information tells me, it might actually be even more. What this does not measure are the people that are still delinquent, taking advantage of that forbearance, that are less than 90 days but are still delinquent. So let's talk about what some of the options are for these people that are right now in financial trouble. So let's just focus on the mortgages. And this is experience going back to 2008. The first one is that they stay and they pay if they can. So obviously they're calling up the lender and they're saying, listen, I want to stay in my house. I'm going to pay. My situation's gotten better. That's obviously a great situation for a lot of these folks. The second one is the traditional short sale. We saw a lot of these in 2008 when mortgages were higher than the values of the home. And basically how that works is that the lender works with a buyer to discount that mortgage. So let's say the lender has a $200,000 mortgage on a home and a buyer says, I'll give you $150,000. Then the lender takes the $50,000 discount and the buyer gets the home for $150,000 and then takes over the payments. A third option is just to completely walk away. And this happened a lot in 2008. I don't anticipate that happening right now because generally people have quite a bit of equity in their homes, and this housing run has been very, very good for many, many people. However, we called it jingle mail in 2008, which meant that they just dropped the keys in the mailbox and they walked away. And as you guys know, it hurt a lot of people's credit, and then they eventually had to end up paying some tax as well as it relates to those lenders getting rid of those mortgages. The fourth one is a refinance, and we just talked about refinances. Now, the only way that you can obviously refinance is if you have good credit, if you have income coming in from a stable job. So a lot of people that maybe got disrupted or started new businesses or started new jobs, they're probably going to have a little bit more difficulty on this refinance piece. And the bank is going to really take a look at, do we want to have them as a credit risk moving forward? So this is going to be very interesting. They're going to want to go to the banks and say, would you refinance? And the banks are now going to have to be in a position to decide, do they want to take another bet on those people that they already lent to that are in the homes that they have already, and how do they want to handle that moving forward? The fifth one is called a deed in lieu. And this is a way that you can avoid foreclosure and the bank takes back your house, but you have to obviously negotiate with that. So it's a deed, they take back the deed in lieu of a foreclosure. And what the homeowner's trying to do is not ruin their credit. And the bank is trying not to go through the foreclosure process. And then the sixth way, of course, is your traditional loan modification. So if you've missed payments over a long period of time and they're stacking up, you're actually going back to the bank and asking them to technically modify your loan. This is a loan modification. Again, there's a process to that. They're going to dig into all your stuff. How are you doing financially? And then you can either extend the term. In some cases, you can throw it on the back. In some cases, they might tack it onto your payment. So this is your traditional loan modification. But what's going to happen is that you're going to have to present all your information, and the bank's going to want to have to bet on you again to stay in that house as they modify your loan. So the next piece we're going to get into a little more detail on in the next slide are the 8.8 late people that are facing eviction on their rent. Now, most people think that this just has to do with apartments, but there's a massive amount of people. As you guys know, a lot of people that watch this channel own houses, duplexes, fourplexes. This is all in that same category. And so if a renter's not paying you, then it's very possibly that you might not be paying the lender, and so on and so on. So this actually, some people think this number is a lot higher. But according to the Consumer Financial Protection Bureau, right now it's at 8.8 million people.
It says real estate crisis, 6 million homeowners in forbearance. Very sad. Before they can receive stimulus money, forbearance means they need to re-qualify for the loan. They don't just get the money automatically. They have to re-qualify. If they lost their job or lost their credit, they may lose their homes. In other words, if you've lost your job in this COVID crisis, which is fake, and you're losing your home, it's in forbearance, but you've lost your job, the bank's still not going to give you the money. It's not like it's automatic. And then it's an opportunity to investors. It's sad news for homeowners and businesses and the country. Because if 6 million people are homeowners in America are in forbearance, that's a lot of people.